This is the Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Singapore. The top stories this hour. Asian stocks set for a positive start after Fed Chair Jay Powell's dovish comments at Jackson Hole. Traders also looking ahead to a key U.S. inflation reading and a slew of earnings headlined by Nvidia. Intel's Asia suppliers also in focus after President Trump seals a deal to give the U.S. a 10% stake, an unconventional bid to revive the struggling chipmaker. And South Korea's president set to meet with Trump later Monday after agreeing to boost ties with Japan in a weekend leaders summit.
We'll be watching the market reaction across Asia, of course, digesting Jackson Hole and those comments, April, when it came to Chair Powell signaling rate cuts to come. But really, it was a tense Jackson Hole, wasn't it? Even physically speaking, we were talking about heightened security on the ground, but also when it comes to monetary policy coming from different central bankers around the world. In fact, Fed Chair calling the situation for the Federal Reserve, given the U.S. economy, pretty challenging. Take a listen.
The stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
Now, Shery, you talk about this tense situation at Jackson Hole. It also potentially translates into that disagreement among policymakers. There's also pressure from outside the Fed, not just political pressure, but think as well to some of the comments from the former St. Louis Fed President James Bullard. And he's, of course, a contender for Fed chief. He's calling for 100 basis points of cuts this year and that there's scope for more in 2026. Take a listen.
I have said 100 basis points, going into 2026. I think you could adjust as you go forward and eventually get a full 100 basis points, but I would go slowly in order to watch the data.
This week, we'll be watching central bankers across Asia with rate decisions coming from the Bank of Korea as well as the Philippines. Take a look at how we're setting up for the market opens across Asia right now. The Japanese yen holding at that 147 level. Nikkei futures pointing to the upside together with Sydney futures. Of course, it's really been about the dollar story on the other side of that trade, sinking in the overnight session. Of course, really reacting to Chair Powell's comments. Take a listen at take a look at how we're setting up for the U.S. market opens because, of course, we were watching U.S. stocks on the Friday session surging after the longest losing streak since January. But it was really Chair Powell's commentary and that sigh of relief coming from investors that potentially we are headed towards an easier monetary path. NASDAQ futures and S&P futures not doing much at the moment, but really not surprising given how significant this week can be. We do have Nvidia earnings later this week as well, Avril.
And Shery, as you alluded to, it's this dovishness and a sigh of relief. Let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage. So, Garf, we're looking at this dovish read-through from Powell's comments. First off, your take on it, and how helpful is that going to be for Asia stocks in particular?
Oh, it's going to be very helpful for Asian stocks. I mean, from a couple of sources, we went into Jackson Hole with a lot of concern that Powell was going to push back on the bets for a September cut, and in particular some of the bets that the September cut would then soon lead to another cut after some fairly concerning inflation data. But he clearly showed that the labour market is front of his mind, and when the labour market is the front of the Fed's mind, then that means rate cuts are coming, and sort of lines up with. He very much framed it as this is what we were always expecting would be the case, that we would cut rates 2 or 3 times this year was how they started the year. Then they refined it to 2 cuts. So if you're going to cut rates twice this year the way they'd planned, then September almost certainly has to be when you start. So that was great for US stocks. Asian stocks will enjoy that as well, both directly and also because it brought the dollar right down. So the dollar comes down, that in and of itself relieves the pressure on a lot of Asian emerging market currencies in particular, but it also makes it easier for things like, now the Bank of Korea, for example, is unlikely to cut rates this week, but it doesn't have to be as hawkish as it might otherwise be because it doesn't have to worry, that if it is not sufficiently hawkish, the Korean won will decline, and that will hurt, that will shake confidence. Similar for the Philippines, they've got a clearer path to do what they need to do based on the internals of their economy, not so much because the dollar's busy pressuring them. Because if Powell had gone hawkish, that would have been a major issue. So we should have a pretty calm week here in Asia, other than, everybody's looking forward to NVIDIA, which is also key for some major Asian stocks.
Right, that's exactly what I was headed to, because we do have summer liquidity to contend with as well, right? Take a look at this chart, because we have seen this incredible rally when it comes to those tech stocks, and perhaps a little bit of a widening of that rally when it comes to U.S. stocks and the S&P 500. But as I mentioned, I mean, NVIDIA, the biggest weight in the S&P 500, almost 8% or so. So how big of a risk could their earnings this Wednesday be for the broader global equity space?
Well, NVIDIA has an enormous impact on global stocks, given both its market size and also its implicit, or its regular volatility. It usually moves around a fair bit, and then that gets amplified by how much it's worth. So just the sheer dollar value that goes through NVIDIA stock, that gives it a lot of weight, and its role as the poster child for the AI boom. On the one hand, NVIDIA has proven most of the time over recent years to not be much of a risk, because it seems if we go in expecting they're going to shoot the lights out, they shoot the lights out even more than expected. And if we go in thinking that maybe this is the time when they start to slow down, they go ahead and shoot the lights out again. So the direct NVIDIA risks seem low. Especially, it definitely helps that the Fed has pivoted to be more dovish. The tech space is still very much equivalent to long duration bonds in its exposure to higher interest rates, so that's going to help. There is a lot of disquiet bubbling away under the surface about the potential that the AI boom is getting close to its speed limit, as it were. There are concerns being raised that the pace of advance in the technology itself is slowing down. It might be reaching a plateau. There are also concerns about the capacity of the US and some other places to meet the power needs for all the data centers. So there are longer term concerns about the AI space. In the short term, NVIDIA may well help to paper over any of those cracks, and we'll see whether the boom can sustain, or in particular, if it can come in for a soft landing, as it were. At some stage, the pace of these gains has to slow down. The question is whether they can slow down without falling back.
Garfield Reynolds, who leads our Markets Live Asia coverage there, with what to expect this week, as we're also following, of course, geopolitics and also negotiations that we've seen when it comes to diplomatic relations between South Korea and Japan. They've agreed to strengthen ties following a weekend meeting between their leaders. Now the Korean president, Lee Jae-myung, is in Washington, D.C. for talks with President Trump later on Monday. Our chief North Asia correspondent, Stephen Engel, joins us now from Hong Kong. And Steve, it was interesting enough that President Lee actually stopped by Japan before heading to the United States. Are we seeing sort of a change in stance coming from President Lee, who has been known to be a harsh critic of Japan in the past?
Well, when you get into office, you oftentimes become much more of a pragmatist, right? So they had to go. It makes sense that he stopped, obviously, in Tokyo first for a couple of hours of talks with the Japanese Prime Minister before going on to visit Washington, D.C., where he is now, and he will meet Donald Trump later on Monday. Keep in mind, Ishiba, the Japanese Prime Minister, has met with Donald Trump at least twice, has had multiple phone calls, whereas the President Lee has not met with Donald Trump. He's a fairly new leader, obviously, after the political and constitutional crisis that we saw in South Korea. So I think he was taking some notes from Prime Minister Ishiba and seeing whether they can build or just keep the status quo on what really developed in the previous administrations in all three countries. Joe Biden and, of course, Fumio Kishida and Yoon Suk-yeol. they had sort of a trilateral agreement to build a cooperation. Well, all three of those leaders are now out of office, and Donald Trump's existence since January essentially has raised a lot of questions about security alliances in East Asia. So that's why I think this meeting, obviously coming up later Monday, is quite important to build upon that trade agreement that South Korea has with Washington, but also what will those security agreements look like, those alliances look like going forward for the next 3 years under Trump.
And what else are we expecting from that Yi-Trump bilateral meeting that some say is actually the bigger one out of these two-way meetings that have been taking place?
Yeah, I think the meeting Saturday in Tokyo was sort of a precursor to the bigger bilat, no doubt. And look, they have to see what kind of relationship Donald Trump can build with the new South Korean president. And where and how does this trade agreement look like going forward? South Korea has promised a $150 billion fund to make American shipbuilding great again. We'll have to see what comes of that. The South Korean president, is likely to visit a Philadelphia shipyard. And also, of course, what is going to happen over the next 3.5 years with South Korea's pledge to buy some $100 billion worth of U.S. energy. Those economic issues are probably the most important part of this, but the security arrangements also critical. Donald Trump has been very critical of South Korea and not picking up bigger bill for housing U.S. soldiers on the Korean Peninsula and their defense budgets as well. That will most likely come up. And also, we've heard that President Yi will urge President Trump to re-engage with Pyongyang. And that would be interesting, obviously, because we all know Donald Trump has met with Kim Jong-un at least three times in Singapore, in Hanoi, and also in Panmunjom, the peace village at the border. But they did not net any concessions or agreements from Pyongyang to curb or curtail their nuclear ambitions. So, again, that will be front and center as well in that meeting in the White House.
Stephen, thank you so much. Our chief North Asia correspondent, Stephen Engel. Now, more ahead on the Asia trade. This is Bloomberg.
The baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Our policy rate is restrictive, modestly so in my view. The stability of the unemployment rate and other labor market measures allows us to proceed carefully. While the labor market appears to be in balance, it is a curious kind of balance. Longer-term inflation expectations, however, as reflected in market and survey-based measures, appear to remain well anchored. We will not allow a one-time increase in the price level to become an ongoing inflation problem.
Fed Chair Jay Powell speaking at Jackson Hole, where he opened the door to an interest rate cut in September, pointing to rising labor market risks. Joining us now is Wang, Chief Asia-Pacific Economist at Vanguard Group. Good to see you. So we are still unpacking some of these Powell comments. The read-through is that it was very dovish. How much cover does this provide to Asian central banks, including the Bank of Korea that has a decision due this week?
Thanks for inviting me today. Good morning. To a certain extent, I would encourage the tone of Powell to be very dovish. I think it's actually a pretty balanced tone. It does recognize that the balance of risk is shifting, so that makes a September cut to be the baseline at this moment. We have been expecting 2 cuts this year, September and December. That seems to be still appropriate after Powell's comments on Friday. However, I think when you listen to his speech and comments, he continued to emphasize the risk on inflation. So to that extent, even if we get a cut in September, I would more characterize as a more hawkish cut. And I think the decision of Fed will be very much dependent on data, especially how weak the labor market will be when they actually make that decision in September. in terms of Asia central banks, now, of course, everybody is watching Fed, what they will do. But I think ultimately, for Asia central banks, their decision will still very much depend on the domestic situation, as well as their reaction function, right? Especially the weaker dollar so far this year is providing central banks some, flexibility, right, to make their decision. You mentioned about Bank of Korea. I would say they probably want to stay on hold this week to be in rather a wait-and-see mode, right? On one hand, we always know that Bank of Korea cares a lot about financial stability risk, housing prices, household debt, and at the same time, we do know Korean growth outlook actually has improved slightly recently. So I think they would just want to, wait a little bit and then, probably wait until October to see what the Fed will do.
But on that Fed rate decision coming on September, what are you seeing in terms of the economic data that has Chair Powell leaning towards a cut? Because we continue to see inflationary pressures high in the United States and, of course, more fiscal policy perhaps opening the taps for a more overheated economy there.
Yeah, I mean, totally. I think at this moment, what is clear in Powell's comments is that Fed is willing to look through the tariff-related inflation as long as inflation expectation is well anchored in the long term, right? So given that, I think in terms of the reaction function, you clearly see the focus is shifting towards the labor market strengths. So I think the question here is that how weak the labor, market is, especially I would say whether the weakening in the labor demand, versus the decline in labor supply. So I think the critical data to watch, obviously, inflation will be the one, but unless there are significant jump in inflation data, then I think the key is see, what is a non-farm payroll, number, and also where the unemployment rate goes. I think that will be something to be critically watched by Fed. Now, that said, I would say, even though Powell said that there should be adjustment in terms of monetary policy, I would say that adjustment will be very gradual and also to a certain extent be rather limited. One is, as you were saying, that the inflation risk is definitely on the upside, especially when the economy seems to be running, pretty hard with the fiscal policy stimulus that's coming. And the other one is also the neutral rate in the economy is higher. So even though we do expect Fed to continue to cut into 2026, we see them stop at 3.5%, by end of next year.
What about what else we heard from Jackson Hole, including from BOJ Governor Kazuo Ueda, talking about how the tight labor market exerts upward pressure on wages? Is that a hawkish enough read-through to you that maybe coalesces expectations around an October rate hike?
Yes, I think BOJ is really the outlier among global central banks. So I think, Japan's situation is a bit different from, other countries. At this moment, we see that Japan growth at this moment is really sustained by domestic demand. We do see some structural turnaround in domestic, both consumption and investment. And also we do see that there is a structural change in the price setting and wage setting behavior sustained by a very tight labor market, right? So given that, I would say, we do see a good chance that inflation will continue to pass through from wage to price. And then core inflation should be able to sustain, around 2%. And that actually provide enough support for BOJ to hike, interest rate later this year, especially when the trade external uncertainty actually has reduced quite a bit after the trade agreement has been achieved. So this is where we actually see BOJ to hike once this year and then continue to do so and gradually bring the interest rate to neutral in coming years.
Deflationary pressures, on the other hand, affecting the Chinese economy as we continue to get data that doesn't look too positive. Will we see the PBOC moving at any point? Does more easy money make sense for this economy at this point?
Well, I think when you look at China, China is totally the opposite story. The weakness is really on the domestic side, right? I mean, export has been holding up so well, so far this year. But, we do see actually more signs of a domestic slowdown. And also this kind of significant demand-supply imbalance is really driving this deflationary pressure. That's, I think, exactly why the government is actually trying to address this more structural issue with the anti-involution, campaign. But I would say, to deal with this deflation challenge, the key is really on, boosting up the demand. On the other hand, I think the anti-involution campaign is likely to be rather gradual and sector-specific. So the impact on, addressing the deflation challenge is likely to be limited. Now, in terms of central bank, I would say, yes, I do think there's room to cut interest rate, when the economy is stuck into this kind of persistent deflationary pressure. But we always know that central bank in China is always reluctant to cut interest rate. So we expect only a very modest 10 base point cut later this year. But even that, I would say, is probably only later this year when the policymakers see more concrete evidence of a downturn in the economy. That is when they're going to step up with more policy stimulus, both monetary and fiscal.
All right, Wang, good to have you with us, Chief Asia-Pacific Economist at Vanguard Group. We have more ahead on the Asia trade. This is Bloomberg.
And we have breaking earnings from Australian gas producer Santos, reporting underlying profit for the first half of the year that beat the average analyst estimate, coming in underlying profit at $508 million versus the estimate of about $433 million. And of course, there had been some expectation that this could come under pressure, and this is against the backdrop of its sales decline in the second quarter, but that doesn't seem to be the case at the moment. Of course, this is also coming along with a lot of focus on the company, given how last week we saw pressure on the stock following the Abu Dhabi-led consortium's takeover of Santos that had sort of delayed $19 billion worth. And we're since hearing that Santos has since agreed, or the group has since agreed to an extension of the process deed. And this will be to the 19th of September this year. Shery.
Yeah, we continue to watch the energy sector, with oil also rising on the back of comments from Fed Chair Powell, of course, that sounded a bit more dovish. We're talking about a potential rate cut to come in September, and you can see U.S. futures at the moment unchanged, but the S&P 500 just had its best day since May after the longest losing streak since January. The Dow is actually at a record high. You can see the Bloomberg Dollar Index not doing much after sinking on the Friday session after Chair Powell's comments, but also the dollar taking a leg lower after President Trump said that he would fire Fed Governor Lisa Cook if she doesn't resign. But this week, of course, all eyes on the tech sector, with NVIDIA reporting on Wednesday. We have more ahead on the Asia trade. This is Bloomberg.
The Fed is looking at slightly higher inflation and a weakening labor market. And what Powell finally did, and many of us feel he should have done this earlier, is he said the risk to the employment side is higher than the risk to the inflation side, and therefore an interest rate cut is warranted. As you know, many of us felt he should have cut last month.
Allianz Chief Economic Advisor Mohamed El-Erian with his take on U.S. monetary policy. We also heard from the former St. Louis Fed President James Bullard saying that he thinks there is a case for 100 basis points of rate cuts before next year. Bullard is a contender to succeed Jay Powell as Fed chair and spoke to us after Powell's comments at Jackson Hole, putting a September cut on the table.
He used the speech to solidify expectations for 25 basis points in September. I was expecting that anyway. Markets were expecting that. He leaned into the most recent labor market report, which was very soft. And so I think that's a done deal. He didn't say too much about beyond that, what you want to do with the October meeting or the December meeting. I have said 100 basis points, going into 2026. So I think you could adjust as you go forward and eventually get a full 100 basis points, but I would go slowly in order to watch the data. And then on the framework review, I'm sure much earlier in the year, they had targeted that they would have the framework discussion and that they would use the Jackson Hole speech to talk about changes to the framework. I thought those were thoughtful and they were well presented in this speech, and they're about what many have speculated on. So I think they did about as much as they can on the framework side.
Jim Bullard, Tom Keenan, good morning to you. I definitely consider this my conversation of the day. You served a lengthy term at the St. Louis Fed. You have lived the decline of a greater economy decades and decades ago in the effort to provide for a resurgent St. Louis. As the next chairman of the Fed, whoever that may be, do they have to manage for two American economies, a technology-driven, exceptional economy, and another, to use a cliche, America flat on their back? How would a chairman execute those two Americas?
Yeah, I think income and wealth distribution have become more salient topics for the Fed. It's not that clear how much the Fed can really do. Providing interest rate policy for the whole economy. If you change the rate structure, that affects everyone, not just one particular group that you might be targeting. So I think that's been something we've had to wrestle with, and I've actually done research on it myself to try to understand it better from my point of view. So I think this has been a theme for a while, and that'll be an important theme in macroeconomics going forward.
Former St. Louis Fed President James Bullard speaking to Bloomberg's Tom Keene. Now, the U.S. government is taking a 10% stake in Intel as part of an unconventional bid to revive the company and boost domestic chip manufacturing. Let's bring in our Asia Tech correspondent, Annabelle Drillers in Hong Kong. Annabelle, what shape is the deal taking?
Yeah, so the broad sort of contours of the deal here is that the US is going to be receiving just over 433 million shares of common stock. That's just under a 10% stake in the business. In terms of the amount the deal is worth, it's $11.1 billion, which we had been reporting was really the funding the company was set to receive under the US Chips and Science Act. Some it's already received around $2 billion worth. The rest was slotted payments for the future. So it's kind of similar to what we've already been discussing. What we do know now, though, as well, is that the US government is going to be a passive owner, which means they're going to have no board seat or other governance information rights. Intel's put out a statement saying that they are grateful for the support from the Trump administration. President Trump, as well, has been on social media saying this is a great step for both Intel and also for America. But it is important as well to underscore that it's very unconventional for the US government to take such a large stake, or really any stake, in a US firm. But it does as well underscore the significance of the overall project and just how much the US government wants to build up the semiconductor production capabilities of US firms as well.
And of course, NVIDIA at the center of those efforts as well. And we are expecting their earnings this week. And we know how consequential this will be because they take, 3% of global market cap, about 8% of the S&P 500 as well. What are we expecting?
Yeah, I think that really just puts it in headlights, really how significant these numbers are going to be. I mean, you kind of had traders maybe breathing a bit of a sigh of relief after J. Powell spoke at Jackson Hole on Friday. But going into this week, it's really going to be the key test, especially because we've seen a little bit of weakness in tech stocks of late and concerns resurfacing again around the health of the spending that we've seen on AI, whether as well that is going to be justified going into the future. But you can see here just what we're going to be watching in these. So revenue, for instance, instance, is estimated to come in at $46 billion. That would be around a 50% jump or just over revenue jump on the year. Adjusted earnings per share, you can see there, $1.01 is expected. It's certainly going to be, as I said, important for the market. We're going to see perhaps big moves in either directions. Options traders, for instance, are looking around a 6% jump in either direction based on the figures that we get out of it. As well, what's going to be really important to track, especially because we had that reporting last week around Beijing or the Chinese government asking mainland firms to not buy H20. That's the chip that was specifically designed for the mainland market. We had as well NVIDIA perhaps putting a production hold on those products. What are they going to be saying about H20 in particular and where they're going in the Chinese market?
Yeah, as we wait to hear about NVIDIA's Chinese business, we're also keeping tabs on consumer tech in the U.S. and Apple is in the spotlight. Its biggest product launch event of the year is nearing. What are we expecting here?
Yeah, well, I think it's actually interesting sort of to also point out that Apple is yet another company that's very dependent on the Chinese market or has a very large market share in the mainland market and has faced a lot of pressure there from homegrown competitors. But what is really important about Apple is really there's sort of no denying that over the past few years you've seen that pace of innovation or design innovation really slow. And there's a really great Power On newsletter out from Mark Gurman, of course, our resident Apple expert, but he's essentially outlining what we can expect from Apple going over the next 3 years. So, yes, you've seen that pace of innovation slow. That is going to be changing dramatically. So from 25, 26, 27, we can essentially expect major overhauls to the iPhone products, so redesigns happening each year. This year, for instance, we can expect the iPhone Air, which takes its name sort of from the MacBook Air laptop strategy, but essentially a very skinny iPhone is expected to come to market. There will be compromises, of course, battery life, for instance, maybe only one rear camera. That's what Mark Gurman was reporting. And then alongside that, we'll get the iPhone 17, 17 Pro, 17 Max. So not too many more major changes expected this year. Then in 2026, we'll get a really big game changer. That's the first ever iPhone foldable. So that will be a really big event, of course. We've already seen Samsung, for instance, having success in that category with their foldable phones. And then 2027, and this is what Mark Gurman is saying is going to be the big game changer, but that's when we'll get a curved glass iPhone 20, and that is when it will really break the design away from what we've seen, of course, in recent years and really become used to as many of us are Apple consumers as well.
Annabelle Jewelers there joining us from Hong Kong with the latest on what to watch in tech, as we will be watching this stock at the open in Japan. Terumo, now we're getting the latest headlines that they will be buying a medical equipment maker Organox for $1.5 billion. This is a UK-based company, and Terumo now coming out with a statement saying that this company is an innovator in organ preservation devices and that they will acquire all shares of the company for approximately $1.5 billion US dollars. So this stock has fallen for the past 4 sessions, but we'll be watching it at the open in Japan. We have more ahead on the Asia trade. This is Bloomberg. We're watching the commodity space. We saw a little bit of a bump in oil prices as well as gold in the New York session. Right now, gold under a little bit of pressure, but of course, we had seen that little bit of a bump after the dollar and bond yields tumbled, with Chair Powell suggesting that interest rate cut come September. Sort of a similar story for oil, which rose after Chair Powell's comments. Crude, of course, standing to benefit from cheaper borrowing costs as well, given that investors expect that to help the broader global economy. We're watching iron ore prices in Singapore. They were up more than 1%, and of course a lot to do with China on this sector as well. Other stories that we're following: Canadian Prime Minister Mark Carney visited Kyiv on Ukraine's Independence Day, pledging support for as long as it takes. Speaking alongside President Volodymyr Zelensky, Carney said peace with Russia must come through strength and did not rule out providing Canadian peacekeepers. Canada also announced over $1.4 billion in military and reconstruction aid. President Zelensky says security guarantees for a post-war Ukraine will be ready in days. In a post on X after meeting with the Dutch Prime Minister, Zelensky added that Ukraine is ready for peace and accused Russia of showing no intention. Meanwhile, Russia and Ukraine exchanged 146 prisoners each in a deal brokered by the UAE. And another story that we're following at the moment, HSBC Swiss Private Bank is said to be ending relationships with wealthy clients from the Middle East, including many with assets including or exceeding $100 million. Sources tell Bloomberg over 1,000 clients from Saudi Arabia, Lebanon, Qatar, and Egypt will be affected. The move comes as the bank seeks to lower its exposure to individuals it considers high risk.
Now, Shery, what we've also been tracking against the backdrop of these Fed developments, also the rally in Chinese stocks. CSI 300 is up about 12%, 11% since the start of the year. This is despite the tariff risks, the property crisis, deflationary pressures, so continuing to defy gravity here. The question is, how much momentum is there? How long can this last? There is also the sense that abundant liquidity in the market and animal spirits being revived can help this rally to continue chugging along. It's also worth noting, though, that this is more or less trailing behind what we've seen on the Hang Seng. There have been indications that it might take a while for A-shares to catch up to the H-share rally of this year. More ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade. China is proposing new rules to regulate internet platform pricing, marking a major shift aimed at curbing unfair practices and boosting transparency. The draft also covers platform behavior, big data use, and coordination between regulators, industry groups, and tech firms. Let's bring in our China correspondent Mimin Lo live in Beijing for us. So, Mimin, tell us more about these new rules.
Hey, Avril. Yeah, these new rules are supposed to benefit consumers because regulators are proposing rules that would require platform operators to charge the same fees for the same types of products or services under the same transaction conditions. So they're not allowed to price discriminate based on consumers' buying patterns, consumption habits, or their ability and willingness to pay using big data and without the knowledge of consumers. And this comes after market regulators back in May also proposed a different set of rules that would regulate the fees, the commission fees, as well as other charges that are imposed on merchants that use these platforms. So it's not exactly an anti-involution campaign, but perhaps more of an anti-monopoly campaign to prevent these platform operators from abusing their power and to protect the smaller and mid-sized companies that use these platforms, especially at a time when they are already facing slower sales because of the consumers' consumption slowdown and their profits being cringed as well by the platform operators. So this is part of the government regulation to protect the smaller players, especially given that they are also some of the biggest generators of new employment in China.
And Mimin, China's property giant Evergrande being delisted today, what happens now?
Yeah, this is a culmination of a very long drawn process. It's finally being delisted, and the liquidation hearings will continue to go on September 2. That is when, September 2nd is when the trial will continue again. And this time the liquidators will likely hone in on the founder, Qian himself, and try to recover the assets that he has, because reportedly he's pocketed as much as about $7 billion over the past decade or so, thanks to the generous payout build-out of the company. And in the past, the trials have so far been focusing on his ex-wife as well as the CEO, and liquidators have uncovered things like an astonishing amount of artworks, luxury properties around the world. But so far, it's a very, very complex undertaking because this is a company with at least 3,000 legal entities in many different jurisdictions, about 1,800 property projects under development in 280 cities. So it's very complicated undertaking here, and so far the liquidators had taken over about 100 of these legal companies so far, but the realization of the assets had been extremely slow and modest, and so far liquidators are saying that there is no holistic restructuring that is within reach right now. The total debt is standing at about $45 billion. That's the estimated amount, and that's far higher than previously anticipated.
And Min, we also continue tracking some of these Chinese developers that are coming under pressure, including Wang. I think losses there widened to $1.7 billion despite support. But another major one we're watching that reported preliminary earnings, Country Garden. The numbers don't look good either.
Yes, Country Garden as well reported preliminary earnings, the first half losses widening to up to $3 billion, which is higher than the losses that they had suffered in the year prior. And this comes against the backdrop of the broad data as well on housing. You look at home sales, it's been declining by about more than 20% in the last couple of months. Home prices had been accelerating declines in the last few months as well. And it seems like the broader recovery in the housing market appears to be backsliding a little bit, and UBS as well delaying the prospect for housing recovery to mid to late 2026. And of course, this declining home sales and home prices will continue to crimp on profits for Country Garden as well. And that's a company that is also undergoing restructuring. It defaulted on its dollar bond back in 2023. It's in talks with stakeholders. It just agreed last month to some restructuring conditions that were requested from some bank creditors. So that could put it on the way to a broader debt deal. But again, you know, the broader recovery of the housing market really doesn't bode well for the prospect of Country Garden going through this debt restructuring process.
Min, thank you so much. Bloomberg China correspondent Min Lo for us there. Now let's check in on crypto as well. I mean, Shery, we've been discussing how the Fed has been really helpful in unlocking risk appetite. This goes to show as well, or is the similar backdrop when it comes to crypto. Bitcoin really surged on Friday, but we're seeing a bit more of, I guess, tepid, muted gain in the Monday session, even though Ether did reach those record highs.
It's really interesting because we're showing perhaps some signs of maturity in the Bitcoin space. Annualized volatility dropping to about 38% from the close to about 200% more than a decade ago. So we'll be watching these moves in the crypto space as we also keep our eyes on, of course, the treasury space and the bond markets in general, given, of course, that it's been a big central bank week. Last week, we had Jackson Hole. We had those comments from Fed Chair Powell, perhaps signaling rate cuts to come as soon as September. And of course, we also are watching what the Bank of Japan will do next. We do have the Bank of Korea rate decision this week as well. Also in Korea, we'll be watching shipping and defense stocks in focus when markets open in a few minutes. This comes as Korea's President Lee Jae-myung prepares to meet with President Trump, and markets anticipate agreements focused on shipbuilding contracts for LNG and defense cooperation. Let's bring in Bloomberg stocks reporter Yu-kyung Lee. And Yu-kyung, of course, we know that President Lee is taking investments of more than $300 billion into the United States. So investors are very much focused on what could be some of the winners and perhaps the losers as well.
Yes, that's right. So if you look at the Kospi futures right now, they're rising about 1%. And if you look at the pre-regular trading, we see some of the nuclear energy and chips and some stocks that could be mentioned, whose sector could be crucial during the upcoming U.S. South Korea summit are gaining some ground. So this is the last trading day in South Korea before President Trump meet President Lee Jae-myung of South Korea for the first time since they were elected. So, and some of the key sectors that could be discussed during their first summit include the shipbuilding and some energy cooperation as South Korea tries to finalize that trade deal with the United States that was signed last month. Now, there are some investment plans that South Korea has been mentioning ahead of the summit, including the $150 billion investment in the shipbuilding of the United States to rebuild the U.S. shipbuilding, which is called MASCA, Make American Shipbuilding Great Again. But investors are still waiting for further details of how that structure is going to be, such as like how the profits going to be shared, what kind of form of investment that's going to be. So today, a lot of investors will be positioned ahead of those the expected result of the summit because this is the last trading day before the two leaders speak.
There seems to be that fair bit of optimism in Korean stocks. What are we seeing among foreign buying investors maybe pushing in?
Sure. So this year's South Korean stock has been the star and global darling in the world. It's been the Kospi has been up more than 30%. But this month in August, we've seen foreign investors shifting their focus to other markets and selling selling those. So they seem to be taking some pause in buying in South Korea given the high valuations after 30% rally. But this week, given the Jackson Hole and the Powell's pivot, we might see some resumed buying by global investors in South Korea.
Right. Yu Kyung, thank you so much. We'll watch the open. Bloomberg stocks reporter Yu Kyung Lee. And here are some other stocks that we'll be tracking in the session as well. Keep it here with us. This is Bloomberg.
This is Asia Trade. We're counting down to Asia's major market opens and the reaction to Jackson Hole and Fed Chair Powell's comments potentially signaling rate cuts to come as soon as September. And April, of course, we're watching also how tense Jackson Hole was, not only because of heightened security on the ground, but just diverging policymakers when it comes to monetary paths.
Yeah, opening the path for September cut, but then after September, then what? The focus still, based on Powell's comments, is going to be on the data. And this week, we have the Fed's preferred gauge of inflation, those core PCE numbers. And as if that's not enough for markets to contend with, we also have NVIDIA earnings, Shery.
Yeah, not to mention the other central bank decisions across Asia, including, of course, in the Philippines and South Korea. And the Bank of Japan Governor Ueda was also at Jackson Hole talking about those continued wage pressures, perhaps leading to more speculation of a rate hike eventually to come this year. You can see Nikkei stocks now gaining 0.8%. There was little movement when it came to the Japanese stock markets last week, but we did see the Japanese yen really jumping against the U.S. dollar, given that the dollar sank after Chair Powell's comments, and not to mention President Trump also again attacking the Fed and Fed Governor Lisa Cook. We're watching the 10-year yield at that 162 level, but it's really about the 30-year yield that we're paying attention to because that's also at record highs. Take a look at how South Korea is coming online. We had pressure for both the Kospi and the Korean won, but of course we're headed towards the Bank of Korea rate decision. The expectation right now is for the central bank to hold rates steady. We're also watching the President Lee Jae-myung's trip to Washington, D.C. after his meeting with Prime Minister Ishiba here. We'll get more indications of where and how that trade deal with the U.S., the details of that trade deal to come later in the week. So the Korean won weakening against the dollar a little bit in this session, April.
Yeah, and this is against the backdrop of that pressure we really saw on the dollar on Friday following Powell's comments. Let's take a look at how treasuries are faring. We saw that curve steepener trade really playing out, the buying on the short end of the treasuries curves, and on the long end still the concern about potentially future inflation, the deficit in the U.S. as well. And worth noting as well that we're seeing a bit of that reversal come through in today's session, but stocks are doing well, including in Australia. And this is despite a bit of a mix showing when it comes to earnings. And this is a market, of course, that has been very well valued. It's been a hot stock market. We have seen, though, investors more or less punishing companies when they miss on earnings. That's something we're going to be watching out in the session. Aussie a bit softer against the greenback at the moment. But again, it was that focus on what Powell had to say. Have a listen.
The stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
Let's bring in Homin Lee, Senior Macro Strategist at Lombard Odier. Homin, really good to have you in the studio with us. So your read-through first and foremost on Powell's comments. Some say dovish, some say very dovish, some say balanced. What is your sense of what he said?
It was, in our view, it was clearly a dovish comment. He, first of all, characterized the current level of interest rate as restrictive, so which means that actually maybe he himself and other FOMC members are open to cuts, additional cuts, even after they resume the easing process in September. And also the focus on labor markets and potential softening there, despite the widely expected spike in tariff-related inflation in the next 12 months. So overall, it simply signaled that a lot of members in the FOMC, perhaps they're open to look through the inflation and focus on the labor market dynamic and consider quite a few rate cuts. Now, this is more or less in line with what we had been expecting. We had been arguing for 6 rate cuts starting in September that brings the Fed fund rate down to 3% by the end of 2026. So we think this more or less confirms that view of dovish bias at the Fed. And if you mix in a bit of political pressures from the White House, we think there's a pretty high likelihood that we get multiple cuts from here, and starting in September. So it was overall a dovish speech.
What is that going to mean for Asia's central banks and EM assets in general?
Well, first of all, we like emerging market assets right now. So in our portfolios, we're overweight emerging market equities, and also we added overweight in emerging market hard credit, and we're also bearish on dollar against emerging market currencies and G10 currencies. So obviously, Asia is part of that broader trend in our view. And when the dollar is range-bound and soft, it simply makes the job easy for the region's central banks. So we do expect some additional rate cuts from the region's central banks, including Bank of Korea, even though we kind of expect a pause in this week's particular meeting. And it keeps the overall funding conditions pretty easy. So we think the Asian assets will continue to grind upward, due to this relatively favorable external environment. And of course, the tariff-related noises, we're slowly beginning to put it behind us. So overall context, we think it's relatively positive for the Asian assets.
Yeah, President Lee Jae-myung right now of South Korea headed to Washington, D.C. to try to hammer out the details of those trade negotiations. Of course, now telling Yonhap News that it's hard to agree to the flexibility of U.S. forces stationed in South Korea. Of course, there are 28,000 plus troops in the United States, as President Trump has signaled that he may want to use more flexibly across the region. But given that, of course, we are awaiting still more details of that $300 billion investment fund coming from South Korea, what's the risk of that this meeting in Washington, D.C. presents for South Korean and other global stocks?
Well, first of all, for South Korean market, obviously the dispersion of potential outcomes from this summit, given Mr. Trump's usual volatile negotiation tactics, is a risk. and we need to simply acknowledge that. But if you think about the broader picture, we think South Korea can actually manage some of these non-tariff concessions they potentially have to make, particularly because part of these programs are basically Korean government funding Korean businesses investing into the U.S. So as long as they can kind of stick to that the core initiative, we think that there is willingness, political willingness in Seoul to basically, hammer this deal, basically finalize this deal and make sure that there are no additional punitive tariffs on South Korea's exports to the U.S. So we are still constructive on the potential outcome of the summit between the two countries. We'll obviously have to see the end result at the end of this summit. But for the global markets, if it really depends on the outcome. But if you have a constructive outcome, it will simply confirm the deal-making phase of the Trumpian negotiations and tariff for the other markets as well. But of course, if it's a very difficult result, then it will have some negative impact. We simply have to wait and see.
That's what I was curious about. How much of the tariff risk or tariff benefits are already priced into the markets as opposed to everything else that's going on? We were talking about central bank policy coming from Jackson Hole, but of course we have NVIDIA earnings this week as well.
So from our perspective, the country-specific tariffs under International Economic Emergency Powers Act are likely fading as a factor for the market, simply because we have now numerous bilateral deals that simply keep the tariff rates at the agreed level for the foreseeable future. And meanwhile, in the relations between U.S. and China, this emergence of a rare earth supply as a leverage gives us greater confidence that they can simply keep things where they are. So in some sense, markets basically assuming that these rates will continue. It's not a terribly unreasonable position to have. However, for the sector-specific tariffs, there are certainly risks, especially for semiconductors, consumer electronics, for which the classification is still unclear, and pharmaceuticals. But we also have to acknowledge that there have been some signals from pragmatic exemptions, like, for instance, exempting companies that invest in the U.S. From some of these tariffs. So when we think about our base case for tariff, sector tariffs still matter. But ultimately, the political and economic realities will probably nudge the Trump administration to something slightly more pragmatic than what's been threatened so far. So we still kind of use that as part of our base case.
Homin, pragmatism aside, what are you seeing in terms of the progress that's being made on South Korea? Some of these corporate reforms, tax plans.
So the ruling party's back and forth on capital gains tax and some other tax measures actually scared the markets in the past few weeks. But our guess is that their political pledge to raise Kospi level to 5,000, we think it still matters, and it's going to be a guide for their capital markets related initiatives. So we do think some favorable gestures on the capital gains tax threshold. And also, as far as commercial code is concerned, and that's basically the heart of the corporate governance reform, we think it's simply in the political interest of the ruling party, which has been relatively favorable to the minority shareholders, to forge ahead on the issues of maybe treasury stock cancellations, cumulative voting issues, and other issues that have been quite important for the corporate governance reform push in the country. So if you combine maybe slightly more market-friendly noises on these tax measures, and also possibility of a greater push for corporate governance reform, we think the pillar for the market to rally further is still there, and that's the reason why we still rank the country as a most favored emerging market, among others. Yeah.
So you're really positive on EMs, with South Korea potentially underpinning all that. But to what extent do you think EMs can outperform DMs this year?
So they have already outperformed to a degree, and that's helped by China's fairly strong performance in the first half, and also South Korea to some extent. We see we still see a remaining upside for emerging markets as far as relative performance against developed markets is concerned. Soft dollar and range-bound dollar environment helps keeps the funding conditions pretty easy. And also, the assets there are still quite cheap compared to developed market assets. So when you have a shift in the investor perception about the stability of these economies going forward, we think that there's still a remaining upside there. And that's the reason why we still have an overweight position on the broader emerging market set at this juncture.
Homin, good to have you with us. Senior macro strategist at Lombard, Odier, joining us today from Singapore. We do have breaking news at the moment on the Bloomberg. We're now hearing that buyout firm Thoma Bravo is nearing a deal to acquire a call center software maker, Verint Systems. This is according to people speaking to Bloomberg, saying that the deal would value Verint at about $2 billion. That would include debt. An agreement could be announced as soon as Monday. No final decision has been made, and discussions could still fall through, according to sources. But Bloomberg News had reported this back in July, that the two were in talks, and we're now hearing again that Thoma Bravo is nearing that deal to acquire Verint Systems, a call center software maker. Now, we are also watching Intel because President Trump has struck an unprecedented deal with the company, giving the U.S. government a nearly 10% stake in the chip maker. The $8.9 billion investment funded by CHIPS Act grants marks a dramatic intervention to boost domestic semiconductor manufacturing. Intel shares jumped more than 5% on the news, though analysts warn money alone won't really solve years of lost ground to rivals.
You know what? I think the United States should be given 10% of Intel. And he said, I would consider that. I said, well, I'd like you to do that because Intel has been left behind.
President Trump there talking about Intel. Now, there are other companies that we are watching in the session today as well, including Santos. After the first half earnings that beat estimates, there was some expectation that a sales decline could drag things down, but it is going against the investor expectation, climbing about 1%. And of course, investors have also been watching out for the latest developments when it comes to its potential takeover by an Abu Dhabi-led consortium. Aside from that, watching Pilbara as well, and it is climbing about 3+%, and this is despite its first loss, I think, in about 4 years. In the green at the moment, and among the stocks that we're watching in Australia. More ahead on the Asia trade. This is Bloomberg. South Korea and Japan have agreed to strengthen ties following a weekend meeting between their leaders. And Korean President Lee Jae-myung is now in Washington for talks with President Trump later Monday. Our chief North Asia correspondent, Stephen Engel, joins us from Hong Kong. Talk us through what stood out to you first from the weekend talk, Steve.
Well, there wasn't a lot said publicly about what they talked about. I'm talking about President Yi and, of course, the Prime Minister of Japan, Ishiba. Essentially, they had 2 hours of talks in Tokyo ahead of the South Korean president heading to Washington, where he is there now. He will be meeting Trump in the White House later on Monday. They both agreed to continue and also reaffirm the need to tackle shared challenges. Pretty vague statements, essentially. But there is increasing uncertainty with Trump in the Oval Office about trade policies and essentially security alliances in East Asia. And of course, at the backdrop of that is the whole North Korean issue. Keep in mind, you have 3 new leaders in these 3 countries, the United States, South Korea, and Japan. Yoon Suk-yeol, Fumio Kishida, and Joe Biden had reached sort of a trilateral rapprochement, if you will, between Korea and Japan in the previous terms of all 3 of these countries. Now you have 3 new leaders. The dynamics are different. So one thing that we wanted to see is whether, of course, President Lee of South Korea and Prime Minister Ishiba would get along and they would be on the same page on economic issues, trade issues, and security issues. And surely President Yi kind of picked Ishiba's brain about how to deal with Donald Trump. Ishiba-san has met with Donald Trump at least twice and has had multiple phone calls, whereas Yi is more new to the office in Seoul and going to Washington, D.C., having struck a trade deal just in July, that there's still a lot of uncertainty going forward. So again, I think this is the smaller bilat in Tokyo, and the bigger bilat is coming up in the White House.
Yeah, and that personal rapport with President Trump, so important, right? I mean, we're already seeing Yonhap citing President Yi, talking about U.S. forces in South Korea, such an important security aspect that needs to be discussed on top of what you mentioned, the trade deal. We still have to get the specifics.
Yeah, that's right. And there's been a lot of pledges made, including pledges by South Korea to help America's shipbuilding become great again. So there was about $150 billion pledged as part of $350 billion in investment pledges by the South Koreans as part of that trade deal that essentially solidified a 15% tariff on the South Koreans. But again, you mentioned about the troops in South Korea. Donald Trump has been a big critic of Seoul not ponying up enough for paying for its own security against the backdrop, of course, of the threat from North Korea. Also, we're hearing President Yi will urge Donald Trump to, reach out again to the North. And I'm not saying have another summit, because Donald Trump had 3 meetings already with Kim Jong-un in his first term in Singapore, in Hanoi, and at the border between North and South Korea. But yet, Kim Jong-un did not make any promises or did not come through with any promises to curtail his nuclear ambitions. So, again, we'll have to see. That could be headlines coming out of that meeting in the White House. But, again, you're absolutely right. Details on this trade deal and any kind of reassurances that Donald Trump can give on the security alliances, the trilateral agreements, longtime security allies, obviously, South Korea and the United States and Japan and the United States. So, again, a lot of question marks to be answered going forward into that meeting in D.C.
Our Chief North Asia correspondent Stephen Engel there, and we'll have more on what to expect from the U.S.-South Korea summit and the bilateral relationship there in the coming hour. Bae Kim Lee joins us to discuss President Yi's visit to Washington, D.C. And take a look at how futures are trading at the moment. European futures still to the downside of 0.1%. This, of course, as we had the U.S. dollar also sinking on the other side of that trade, with the euro holding at that 1.16 level. We had seen Chair Powell's comments really taking the greenback lower, but also President Trump's comments that he would fire Fed Governor Lisa Cook if she does not resign, really weighing on the dollar. ECB President Lagarde talking about Europe's labor market proving pretty resilient. We have more ahead. This is Bloomberg.
Now, we've been watching commentary from central bankers at Jackson Hole, including the BOJ Governor Kazuo Ueda, reminding markets that they are inching higher when it comes to wage pressures amid a tight labor market. Does this cement some of these bets or pull forward the expectations of a BOJ rate hike? We are seeing that pressure on the U.S. 10-year, a bit of a reversal from Friday's session, where we, of course, saw this buying led by the short end on U.S. 2 years in particular, but giving some pause now at the moment. The Fed, after all, did highlight that it's really going to still be data dependent. That seems to be the takeaway as well. That being said, we are seeing mostly across the G10s, including in Japan, the 10 years climbing against the backdrop of what we got from the Federal Reserve. In the meantime, former St. Louis Fed President James Bullard says he thinks there is a case for 100 basis points of rate cuts before next year. Bullard is a contender to succeed Jay Powell as Fed chair and spoke to us after Powell's comments at Jackson Hole, putting a September cut on the table.
He used the speech to solidify expectations for 25 basis points in September. I was expecting that anyway. Markets were expecting that. He leaned into the most recent labor market report, which was very soft. And so I think that's a done deal. He didn't say too much about beyond that, what you want to do with the October meeting or the December meeting. I have said 100 basis points, going into 2026. So I think you could adjust as you go forward and eventually get a full 100 basis points, but I would go slowly in order to watch the data. And then on the framework review, I'm sure much earlier in the year, they had targeted that they would have the framework discussion and that they would use the Jackson Hole speech to talk about changes to the framework. I thought those were thoughtful and they were well presented in this speech, and they're about what many have speculated on. So I think they did about as much as they can on the framework side.
Jim Bullard, Tom Keenan, good morning to you. I definitely consider this my conversation of the day. You served a lengthy term at the St. Louis Fed. You have lived the decline of a greater economy decades and decades ago in the effort to provide for a resurgent St. Louis. As the next chairman of the Fed, whoever that may be, do they have to manage for two American economies, a technology-driven, exceptional economy, and another, to use a cliche, America flat on their back? How would a chairman execute those two Americas?
Yeah, I think income and wealth distribution have become more salient topics for the Fed. It's not that clear how much the Fed can really do. Providing interest rate policy for the whole economy. If you change the rate structure, that affects everyone, not just one particular group that you might be targeting. So I think that's been something we've had to wrestle with, and I've actually done research on it myself to try to understand it better from my point of view. So I think this has been a theme for a while, and that'll be an important theme in macroeconomics going forward.
Former St. Louis Fed President James Bullard speaking to Bloomberg's Tom Keene. This is Bloomberg.
Some of the top stories we're following. Canadian Prime Minister Mart visited Kyiv on Ukraine's Independence Day, pledging support for as long as it takes. Speaking alongside President Volodymyr Zelensky, Carney said peace with Russia must come through strength and did not rule out providing Canadian peacekeepers. Canada also announced more than $1.4 billion in military and reconstruction aid. President Zelensky says security guarantees for a post-war Ukraine will be ready in days. In a post on X after meeting with the Dutch Prime Minister, Zelensky added that Ukraine is ready for peace and accused Russia of showing no intention. Meanwhile, Russia and Ukraine exchanged 146 prisoners each in a deal brokered by the UAE. And of course, geopolitics always in the backdrop. When it comes to some of these market moves, we are watching out for what we potentially can get in terms of the U.S. and South Korea. Do we see more details on their investment deals? For the moment, Shery, the South Korean benchmark is in the green, in line with the rest of Asia, helped along by what we got from the Federal Reserve.
Yeah, as we are also watching the geopolitical backdrop from South Korea, with the President Lee Jae-myung scheduled to meet with President Trump in Washington on Monday, with trade negotiations and the future of their alliance topping the agenda. The visit coming on the heels of President Lee's meeting with Japanese Prime Minister Shigeru Ishiba, where both leaders pledged to strengthen ties and enhance trilateral cooperation with the United States. Let's get more with Choi Byung-il, President for Trade Strategy and the Innovation Hub at law firm Pae Kim & Lee. He was previously a chief negotiator for Korea at the WTO. It's really great to have you with us. Welcome to the show. So let me get started by asking how important it is for South Korea to get more clarity when it comes to really the function of that $350 billion fund when it comes to investments into the United States, and how the profits will be divided.
Yeah, the question is, we have very important trade deal which was reached in late July, and this summit is taking place in backdrop of that important trade deal. The problem is two sides seems to have different interpretation. So, the forthcoming summit between Lee and Trump, they try to iron out any differences, especially focusing on Korea's helping U.S. shipbuilding industry under the slogan of MASCA, Make American Shipping Great Again. And on top of that, some trade issues. For instance, Korea agreed to reduce automobile tariff and forthcoming semiconductor tariff, something like 15%, but time frame has not been decided. So from Korea perspective, it is very important for them to pin down what is going to be exact implementation date.
What would a win for President Lee Jae-myung in this summit look like? What does he need to achieve?
Well, when you consider the situation back in late July, Japan agreed the deal, and EU agreed deal, and two countries and two blocs considered to be major competitor for Korea's manufacturing sector. So for Korea's perspective, they need to put a lot of investment package to make sure Trump is going to declare trade deal got. But because of time pressure, looks like they couldn't iron out differences. So it is time for them to more elaborate what can be done on the time frame. For instance, which sector should be put the money. From U.S. perspective, they want to put the money in semiconductors and batteries and energies, and of course there is Korea interest. But the problem is, the structure of investment. President Trump seems to hint, he can dictate all the terms and condition investment, but Korean presidential office interpretation rather different. So I think this is time for them to meet and narrow down those differences. So we are very curious. At the end of summit, they will come out some joint statement, the joint declarations, which providing very much detail. But considering all this process leading up to this summit, I think that we can not rule out some possibility. We need more time to move on.
You talk about the time pressure from perhaps preventing a bit of these trade details to have emerged once those pacts were signed. But we know how trade deals also take years, as you well know, to iron out. What is your sense of potentially in a bilateral that there is enough time, especially since Trump does seem to be using tariffs as a sort of bargaining chip?
Yeah, it is right. But, you have to understand what is happening is not just between Korea and United States. Mr. Trump, ever since April 2nd, he declared so-called Liberation Day for the U.S. He is negotiating with, so many countries in the world at the same time. So from Korea's perspective, it's bilateral, but Korea should be mindful. Before Korea, many countries has reached deal, and after Korea, still many other countries line up to negotiate deal, including countries like India and Taiwan. Maybe China is also on the line. So that means Korea need to play negotiation in mindful of those possibilities. Korea shouldn't, from negotiation perspective, they want to make sure the deal or the agreement they're going to get with Mr. Trump is not going to be less disadvantageous for Korean companies, mindful of future forthcoming tariff. For instance, semiconductor, he has hinted somewhere between 100% to 100%, 300%, even hinting that all those global companies which pledge to make investment in the USA is exempted. But that doesn't clear the possibility. What if Korean company like SK and Samsung, which is exporting outside of USA, importing to the USA, is it exempted from tariff, or is it subject to some 100%, or Korea can be given like EU, like 15%? All those things are still subject to speculation, so that is something. And also, we have to understand this tariff, Trump is an ongoing evolutionary process. For instance, he is still hinting more possible, tariff on pharmaceuticals and furniture, and so on and so forth. That means the fact that deal has been declared doesn't mean the end of road, because we have so many things to go further.
help us understand the appetite from South Korean companies potentially for investing into the U.S. I mean, among the sectors, including shipbuilders, which are, as we know, top of their class, what's in it potentially for them?
Well, you see, according to news report and all these Korean companies, the important bargaining leverage, so-called the card Korea had in the 11th hour negotiation is considered shipbuilding, because this is the time for so-called economic security, where trade mirrors security issues, and we understand the ongoing power competition between U.S. and China. But from U.S. perspective, their shipping building capacity is in very declining, and Korea can make that capacity innovated using Korea's manufacturing capacity, and that is one thing. And Korea earmarked something like $115 billion in shipbuilding capacity. But to make it happen, U.S. need is their homework. For instance, they need to revamping their regulatory hurdles and all those issues. So whether or not they can come out of this summit some tangible deliverable, including some possible U.S. promise to revamping their regulatory hurdles, is something to see.
You mentioned the power dynamics and how that could affect really the talks as well, right? I mean, even when it comes to shipbuilding, we saw those fees coming from the U.S. on Chinese-built ships docking in the U.S. In what other areas could South Korea benefit from the different power dynamics at play right now geopolitically?
Well, you see the semiconductor and batteries, on the top of negotiations, because look, in recent several years, Korea has emerged the top investing country to the USA in those semiconductor and battery, which is also again at center of power competition between China and USA. So Samsung, SK Hynix, and LGs, and they put tremendous amount of money in the USA, and so they obviously benefit from Biden era CHIPS Act. And looks like a Trump administration, they want to change the tone. So there's, the news report that they may request some kind of deal. For instance, demanding some kind of equity position in Korean or foreign investment in the USA in shipbuilding. The semiconductors. Whether that is going to be done or not is something very under serious considerations. But obviously, that is an area Korea should get a lot of benefit.
It's been really good to get your insights. Thank you so much for joining us on the program. Choi Byung-il is president of the Trade Strategy and Innovation Hub at Qian and Lee. More ahead on the Asia trade, this is Bloomberg. Chinese property developer Evergrande will be removed from the Hong Kong Stock Exchange today, a year and a half after the shares were suspended and almost 16 years after it was listed. Let's bring in our China correspondent Min Lo in Beijing. So, Min, we've been talking about this delisting. The day has come. What happens next?
Yeah, I'm sure a lot of equity holders will be wondering, what's going to happen to their assets. And there's still a long list of creditors that are also waiting to get their money back as well. So the liquidation hearing will continue. September 2nd is the date to watch. That's when liquidators will likely go after the founder himself, Qian, and they have to convince the high courts to basically force the founder to disclose his assets, because so far the trials in the past had focused on the ex-wife and the CEO, both of whom had used a variety of ways to try to delay the disclosure of their assets, but eventually they weren't able to avoid the disclosure. And that has helped liquidators uncover a lot of assets, including an astonishing amount of expensive artwork, as well as luxury properties around the world. Qian himself is said to have pocketed about $7 billion over the past decade, thanks to the dividends and the generous payouts from the company. And it's estimated to be about an 1/8 of the total debt that the company owes now, which is $45 billion, higher than previously anticipated. And liquidators now say that there is no holistic way to restructure the company that is not within reach. But another challenge for offshore creditors is that a lot of the assets that are on the mainland will be very hard for them to access because it's a different jurisdiction. And you add to that the complexity of the organization itself. It has 3,000 legal entities across different jurisdictions, thousands of projects that are ongoing in hundreds of different cities. So it's really a very complex undertaking for liquidators to go through all of that.
Yeah, and the woes around the property sector in China continuing for other property developers as well, right? Country Garden, preliminary earnings out, they don't look good.
Yes, the preliminary earnings for the first half expected to have widened to $3 billion in losses. That's higher than the losses they suffered a year earlier. And this comes against this backdrop of the broader housing data looking pretty negative as well. We're looking at home sales down by 20% or more over the past couple of months. Home prices continuing to accelerate this decline after it recovered for a period. So it looks like we are seeing a bit of backsliding when it comes to the property recovery. UBS as well has delayed their forecast of the recovery of the sector to mid to late 2026. And again, if home prices are falling, that eats into profit margins of companies like Country Garden, and it's already struggling to, restructure its debt. It defaulted on a dollar bond payment back in 2023. The company says it's in touch with stakeholders. It has previously, just last month, agreed to some restructuring terms requested by some bank creditors. So that puts it on its way to perhaps reach a broader debt deal. But again, overall, the sector is not doing too well.
Bloomberg's China correspondent Byung-il Lo, and of course the property sector weighing on the Chinese economy, also the U.S. tariffs. And in spite of all of that, though, China's stocks extending their bull run. And this disconnect is raising doubts about the rally's staying power. Asia equities reporter Winnie Su joins us now from Hong Kong. Winnie, so how concerned are investors about this divergence between China's onshore stock rally and also weak macroeconomic environment?
Yeah, that has been a key discussion topic among investors. We were hearing that from the likes of Nomura, CITIC, and also Bank of America actually said that while they were talking to their mainland investors, that is the biggest concern that they are having, that big gap that we're seeing between the macro bears and the market bulls that's kind of diverging right now. And that is giving some people a flashback of what happened in 2015, the boom and bust. And this question about if a rally is actually going to be sustainable during a deflationary environment is being discussed among lots of economists right now. And actually, we don't really see a bull market and a deflationary environment coexisting. And that's mainly because during a deflationary period, that's going to hurt companies' pricing power and hence their profit margins. So what we're seeing right now is kind of an early signs of bubble, as we talked to one of the key strategists, Hao Hong, last week, who called the boom and bust of 2015. He says that we are seeing the elements of the bubbles, right? The elements being first the liquidity and also the retail frenzy. Although it's not there, we're starting to see some excitement among retail investors, and also that big picture that people are looking for. And this time, it's the improvement of the relationship between U.S. and China. So while he's forecasting maybe 5,000 at the level where we're going to call a bubble, there are some elements of that starting to emerge.
Right, it's important. I mean, you give us a good reminder of how the fundamentals don't really match the stock market moves. But in the short term, is there further to go on the upside?
Yeah, absolutely. So while it's giving people some of the flashbacks of what happened in 2015, many are still saying that this time it's a bit more sustainable. And as you mentioned just now, Avril, from the tactical side of things, the retail investors' sentiment, it's there, but this time the pace is slower, and also we're seeing the broadening of the rally. So we are also having a lot of kind of the savings of households still sitting there. So more upside to come when it comes from deploying that money from savings into the investment in stocks. And also the rotation of institutional investors going from bonds to equities. So from that aspect, we are seeing more upside. But when you also look at the differences against 2015, there are some structural changes that we saw in the past decade, be it the advancement in artificial intelligence as we saw in DeepSeek and also the biotechs this year. And also the policy tone is more different this time, with the government saying that it's guiding long-term money into investing into equities. So it seems like this time we have a bit more favorable environment. But just to keep in mind, when we think about what happened to Japan, some people were talking about this is the Japanification of China. It was in that last decade, last 3 decades, until that inflationary cycle really kicked in 2024 for the stock market to reach the record high. So there are some lessons that we can learn for the Chinese stocks.
And when you were also watching the Hang Seng Index, we're hearing that Mart, the maker of the famous Labubu dolls, has been included in this index.
Yes, so analysts have been talking about the inclusion of Mart for a couple quarters by now. So finally, because of how much the stock has gone, has surged, and also the kind of the change of the patterns when it comes to new consumption and the consumer behaviors in China, we are seeing more upside for this stock. And being included in the index also means that there's going to be more passive flows for the index as well. So when we just look at kind of the changes when it comes to the reshuffling, right? We are getting right now 88 numbers of constituents when it comes to the HSI compared to 85 previously, and Goldman Sachs is expecting this to increase the index cap of HSI by about 1.6% and the HSCI about 1%. So with the changes that we're seeing, the addition of the 3 companies into HSI, that is also going to provide some further tailwind. But just to keep in mind that we are also in the peak of earnings season, so that might mean that there's going to be more volatility until the actual effective date in September.
That rebalancing reflecting newer consumer habits in China as well, potentially. Winnie, thank you so much, Bloomberg's Winnie Su, for us. More ahead on the Asia trade. This is Bloomberg.
We're following emerging market assets at the moment as well, because we saw that boost coming from Chair Powell's more dovish commentary around its upcoming rate cuts, potentially as soon as September. So we had emerging market stocks, currencies all gaining a little bit of ground. Of course, the dollar was under pressure in the previous session. We're talking about some levels that we haven't seen in weeks, sinking after we got those comments from Chair Powell talking about potential monetary easing to come. But you can see right there that despite the fact that we have seen emerging market stocks and developed peer stocks rising more than 10% in April, when it comes to forecasts about where the stock markets are going, analysts putting emerging market stocks ahead of gains coming from developed peers. We're talking about gains of around 15% over the next 12 months. And of course, the reasons are pretty clear. If you get Fed policy easing, if you get investments pivoting away from the U.S., and of course, a little bit more certainty over tariffs as well, Avril.
Yeah, and for EMs, if the Fed has opened the door to these Fed rate cuts, it could also provide cover for their central bank. So looser monetary policy backdrop that will overall be helpful for EM assets. We spoke to Lombard Odier's Homin earlier, and he suggested that when it comes to EM FX, they're just getting started on the climb against the greenback. Also worth noting what we're seeing in EM bonds versus their DM peers. They have been outperforming, and perhaps also what we're seeing among them is how the market has enforced this sort of fiscal discipline among EMs. And that bodes well, potentially as well, for EM bonds overall. But aside from that, let's take a look at how cryptos are faring, because we did see that sharp surge on Friday, following on from Chair Powell's commentary at Jackson Hole. It's interesting, we are pulling a bit softer. 112,000 on Bitcoin at the moment. And this is against the backdrop of volatility sort of coming down on crypto overall, although traders seem to be turning to Ethereum instead to chase these price swings. That's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.